Patil is Chief Investment Officer at Aditya Birla Sun Life Asset Management Company. Mahesh, great to have you with us here. Good morning. Thanks very much for joining in. From the insurance space, now with this amendment passing, although it doesn't have the composite license, the open architecture is missing, but there is other stuff. You're part of course, a conglomerate which is insurance businesses as well. But from an investment point of view, in your portfolios that you oversee, Mahesh, what's the leaning towards in this space?
Yeah, so insurance sector is a sector which we have been positive now for last 1 year. I mean, last year we had a lot of regulatory headwinds in that sector, okay, which impacted the growth over there. And subsequently, we have seen some kind of a relaxation over there. And I think overall, again, the growth in the sector, which had kind of mellowed down, is again coming back. There is some impact because of the commissions and the regulation on that, which could have some impact on the margins. But more importantly, I think the GST cuts, what we had seen, that is also leading to overall cost coming down for the buyers, and that is especially say in the health insurance space, and that's the reason why we're seeing good volume growth. So I think as long as the volume growth remains fairly strong, and which you've seen in these monthly numbers coming in, I think the slight impact on margins, okay, which could be there, that can easily be overcome. And this is a sector which we see a good long-term secular growth, which can compound at around, say, 13 to 15% in that range.
That's insurance. Got that point. Mahesh, great to have you with us on the show today. Let's talk quick commerce, food delivery and whatnot, because, that's where the game is being redefined every single day. Look at Meesho. And I know that you won't comment on individual stocks, but I'm not quite sure what's going on here. The company finally came in and offered shares at 111 rupees. Stocks now, getting very close to 200. So is this FOMO playing out? At the same time, we've seen a cool off on the likes of Eternal and Swiggy. Zepto is hitting the market with an large issue next week. So this is a very hot space. How should investors think about it? And, what do you like? What do you dislike? And how are you, what's your approach to the whole space?
Yeah, so all these new age companies which are coming up, again, are disrupting the existing business model. And each company has a particular moat or a competitive advantage, okay, which they are trying to get in and capitalize on that to capture the market. So market has already been there, right? It's more about getting the market, getting more market share. And these are very high growth companies. So the way to look at these companies is not just the next 1 year, 2 years. You have to take a slightly longer term view, say at least the next 3 to 5 years view, and then look at how this compounding growth over that period would lead to cash flows and the discount, and see where the valuations are really fit into one's matrix. But more importantly, I think it's important to look at companies which have already established a clear leadership in that particular segment. So that ensures that they have the scale and size, okay, which will help them to really bring down the initial fixed cost much faster. And if the competitive intensity is fairly well established, right, then I think the road to profitability is much clearer. I think these are the factors, I think, which we look at in these names. And where the competitive intensity is increasing because of another play coming in, then we see some volatility coming in, and we've seen that in the quick commerce space.
All right. Hi, Mahesh. Good morning, and good to see you in. A quick question on, the rupee move. That's seemed to be making some part of the street a little uncomfortable. Today, there is some kind of appreciation that we're seeing out there. Is that concerning, or is it par for the course? Some would argue that the kind of, slip that we have seen, maybe in fact it's intentional in a particular manner, to help us out in terms of the deficit number. What's your view?
So if you look at in this calendar year, this year, I think rupee has been one of the worst performing currencies. But the more recent fall, if you see in the last 3 months or so, that is also in line with what we've seen in some of the other Asian currencies also, which have depreciated. Obviously, I think India is still yet to sign the trade deal, so that's impacting. But I think it looks like the way the government is taking the route is that let the rupee, because RBI, which initially was defending the rupee at around 88 rupees or so, has now kind of given away a bit. The intervention is much lower. And I think the rupee depreciation is a mechanism by way we are trying to really ensure that the competitiveness of our exporters, okay, which have been kind of impaired because of the tariffs, okay, to some extent it is taken care of, and overall improve the competitive vis-a-vis the other currencies. That's a more recent phenomenon in the last 3 months where we've seen other Asian currencies also depreciate. And overall, from a market standpoint, I think currency, once it depreciates and stabilizes at a particular point in time, we have seen that it is normally positive for earnings because if you look at the Nifty, for example, around 50% of the companies have a positive correlation to the rupee depreciation because either they are having, they are exporting, especially sectors like IT, metals, oil and gas sector, even auto exporters. So in a way, I think it will also have a calming impact on the market once it stabilizes because you could see this translating into some kind of an earnings uplift. And yeah, so I think as long as once the market gets a confidence that this is a level where it will find support, I think you will also see then money flow coming into the market. And rupee now is slightly undervalued on a RER basis. So if at all we see that the current account stabilizes, which is actually showing a good trend in this last month, I think the rupee should hold on over here.
Okay, all right. Got that. Actually, a big appreciation is what we are seeing, in today's trading session. I think we should just pull up an intraday chart of the rupee. There's a sharp pullback. I was chatting with Lata yesterday and I spoke to a few economists as well. The RBI stepped aside. That was one factor that was plaguing the rupee. Then you had FI selling as well that had continued. But the hope is getting into 2026, there'll be fresh allocations. And maybe, in fact, India gets its share. So that's what could help it. And in fact, it's a seasonally weak month. In December, you normally see that the rupee is a little bit weakish. While getting into Q4, the deficit number looks better. You have exports that are pushed out, which gives you some kind of support. So for the time being, stability and some appreciation is what we're seeing on the Indian rupee. Mahesh, I was just looking at some of the portfolios out there, and it appears on a sector like metals, if I'm not mistaken, you're relatively underweight. You could correct me on that. But what's the view? Because it appears there's a bit of a melt-up taking place in that space. Valuations come secondary, momentum comes first.
So in metals, okay, we might be slight underweight, but actually our view has been turning positive on the metal space, and we had increased or reduced our underweight over a period of time. And again, the reason for that has been that the sector has been a kind of a underperformer last year, and that's one of the reasons it's underowned also. And with dollar kind of a weakening, we've seen uptick across metals. We are more positive on the non-ferrous side, though, because there we see drivers which are not the short term, but also more structural, because demand for, say, aluminium and this thing is likely to be better coming in from electric vehicles and also in this aerospace space. And there the demand-supply gap, okay, would be favorable, which will support prices higher. So I think that's the view on the metals. We are not negative. We are turning mildly positive over there. But again, this is a sector which is to be watched in terms of what China does, because it's still the largest consumer and producer of metals. And at the margin, I think how the Chinese economy and the IIP numbers track will determine in terms of how sustainable some of these movements are.
Okay, all right, got that. Thank you very much, Mahesh. Good to have your perspective on the market. And we wish you a very, very, happy holiday season and a happy new year in case we don't talk up until the 1st again. Thank you for joining in.
Thank you.